Yo, what's going on, guys? It's your boy Mac the Trader, and welcome back to another video. Within this video, we're going to be breaking down a 10.51% trade on USDCAD that took place this morning. Now, yesterday was Memorial Day. We did not trade the markets at all. This morning, we started our analysis for London session around 12 o'clock a.m., and I'm going to break down USDCAD from the higher time frame all the way down to the lower time frame, showing you guys a little insight into my process for analyzing the market, doing a top-down analysis. All right. If you guys enjoyed this video, feel free to leave a like, and if you're not subscribed to the YouTube channel, hit that subscribe button, join the YouTube family. We are definitely going to be continuing breaking down these trades for you all, so you all can catch exactly how we trade these markets, and you guys can continue to produce these types of results. Now, this trade here could have passed any number of funded challenges for you guys, so I'm going to try to go in as much detail as possible without going into mentorship type of information. Now let's go ahead and break this down. Alright, so on USDCAD, of course, we're going to start on the monthly time frame. Our job is to essentially identify where we have institutional demand and institutional supply, right? So here we can see we have institutional supply, right? Now, I really don't like this long wick. Because this wick is so long, you would definitely want to refine this down, all right, to the lower time frames if price were to come into this area. But because we're on the monthly time frame, we have to mark what we see. We cannot control the zones at all. The zones are given to us. So here we can see that we have an institutional supply area, right? We also had one here that was not respected whatsoever. That's why you guys don't see it on my chart anymore, right? We did have one here. Okay, and then if we're looking at institutional demand, right, we have a little area right here that I would consider institutional demand. You know, nothing too serious. Can we grab it? Is it gonna let us grab it? There we go. Nothing too serious, but we definitely have some type of area here that we can then, you know, go down to the weekly time frames and the H4 and the daily time frames and see if we have any type of refinement, right? All of this here I would consider mitigated. We can see that we have this push to the downside, move back up, price moved back into that region. Once again, push to the downside, move back up, price moved back down into that region. And then this is the last area where we do see, you know, some type of institutional demand coming to the market. Now, it's very easy to mark these zones, right? Those of you that are a part of the mentorship program that have access to the index trading courses and the institutional trading courses, you guys know we spend a lot of time, right, on how to actually mark up zones and find the point of interest, right? And those of you all within the Telegram community, right, whenever we do have a trade set up, you guys are able to see, you know, how price interacts with these zones and things like that. I get a lot of questions about, Mac, is it difficult to, you know, find these zones? And it's not difficult at all, but you are going to have to really practice it, right? It's like having a personal trainer. You know, someone can, you know, show you, you know, how to work out and what to eat and what to drink, but at the end of the day, it's going to fall on you to do so. And it's the same thing with trading. Like, I can give you these points of interest, but at the end of the day, it's going to fall on you whether or not you're going to be back testing and studying the live markets and continuing to analyze the markets even when you are incorrect, right? And as long as the analysis is correct, then you're correct, right? That's how you have to look at it. The next step after that is taking advantage of the analysis, and that's a whole nother ordeal that, you know, the mentorship program definitely teaches you how to do. So if we go down to the weekly time frame, right, we can see that we do have this point of interest here and we have this point of interest here. Now, price came very, very close to this point of interest, right? And for this point of interest here, I also don't like how, you know, this wick kind of trades into it already, right? So I'm definitely more so focused on this area here, especially because it was a flip. Oops, I forgot this is the weekly time frame. Okay, so we see that we have a break of structure here with a little imbalance. Okay, so I am liking this point of interest a lot more than this point of interest. All right, and let's actually fix that up. There we go. To be honest with you guys, you know, price has already traded back into this area. This was probably an entry on the lower time frame, and then we can see that, you know, price, you know, runs to the upside and flips this supply here. right? So this is my point of interest that I'm really paying attention to, all right, long term as it relates to USDCAD. Who knows, price may trade into it, within the next couple of months. It may not. It really doesn't matter to us all too much as long as the charts are, marked up. We'll be prepared, whenever price does trade into this area. We also see that we have some decent liquidity here as well, right? So we took a sell position this morning. That was mainly based off the weekly time frame, if I'm being honest with you guys. And the reason why I say that is because within the weekly time frame, we are currently within premium pricing, right? Before price pushes to the upside, we would like to see, right? Now this doesn't have to happen, anytime soon at all, but just understand we would like to see price trade within discount and then possibly push within premium. However, if we're looking at the controlling structure, right, the controlling structure would be here, and we can see that price runs into this area, right, and trades into this exactly, and then we have a nice push to the upside. If you knew me, okay, when price was here, if you knew us in April, we actually took buy positions here in April, and the reason being was because of this analysis right here, right? We have a beautiful point of interest. All right, price traded into it, and then we traded out of it. So this is the controlling structure here. All right, so price has transitioned from substructure to minor structure, right? As we can see, all still within internal, right? Because we haven't taken out this high just yet, right? However, okay, if we're looking for better buy positions, we would want to see price sell. All right, just keep in mind the weekly time frame. All right, we are internally bullish right now. All right, so technically speaking, if we do get a buy opportunity on the lower time frame, I will be targeting this high just based on my trading rules. Because remember, we are mechanical traders here at Mac Trading Academy. All right, we have rules and we follow those rules to the T. This is the area where we took buy positions off of, by the way. Right here within this area, we took longs, and also in February, we also took buy positions here as well, all the way through this area actually. Anyways, let's go ahead and continue moving on within the analysis. So if we go to the daily time frame, right, on the daily time frame, right, what we can see is we already have a transition of structure. Now, keep in mind, weekly we are internally bullish, and on the daily, we are also internally bullish, okay? Price moved to the upside here. We started to break down. Price traded into this area. This is where we were able to also catch buy positions. You guys see the point of interest marked up, and then we have a lower time frame entry here, all right, for that nice run. It was a beautiful trade. And if we're talking about and looking at the most recent level of, since we are bullish, if we're looking at the most recent level of demand that we would like to see price interact with, one would be here, okay, and another would be right here. All right, this was a flip of this supply here, okay? We do have the end all be all, which is here within this region, all right? But the thing I don't like about this, point of interest here is the fact that, price is already traded into this area. We spiked to the upside and then we traded back down. So this accumulation I'm going to consider already mitigated, right? Whatever orders needed to be filled, I'm sure they were filled within this area just based on what I'm seeing with the candlestick analysis. However, here, all right, within this area, okay, we can see that after we had a neutral balance of orders, we see that the very next candle shot straight to the upside and we left imbalance within the market here, right? Therefore, I would like to see price trade down into this region, all right, before continuing to push to the upside. If we're also looking at premium and discount structure of this current leg here, even though we haven't broken external just yet, right, 50% would be around this area here. So that would be our equilibrium. And then anything below that, we would be excellent to take buy position. So we're currently within premium on the daily time frame, and on the weekly, we have time frame correlation and confluence. Let's go ahead and go down to the H4 time frame so I can give you guys this H4 point of interest here. So we have a daily point of interest here, and then we have a little bit of overlap with an H4 point of interest, which is here, right? Now, the reason why I'm not using this H4 point of interest here is because it pretty much matches the daily point of interest, right? I want to get a little bit more specific with what was directly responsible for this push here, okay? And that's going to be this area right here. All right, so feel free to mark it up on your charts, and when USDCAD comes back to this area, all right, we should have a pretty decent reaction that we could possibly trade from. All right. Now, as we continue moving to the lower time frames, let's first start on the H1 time frame. Let's just get rid of this and this. Okay, so as it relates to preparing for the day trade on USDCAD, right, that was pulled off of the H1. Now, you still have to go from the top. You still have to do a top-down analysis so you can understand where you are within the market, right? Once you do that top-down analysis and you understand where you are within the market, you have your institutional supply, your institutional demand, you understand whether or not your premium and discount, and you understand what leg of structure you are in and creating, okay? Then you can start to go down to the lower time frame and look for those high probability trades that align with the higher time frame top-down analysis. So in the H1 time frame, we can see that we had a break of structure here, right? Price pushed to the upside, and then we had a nice move to the downside. Now, price came really close to touching this institutional supply here, right? But we didn't quite tap into it, right? Therefore, we're going to use this area here as inducement, all right? So it's just simply liquidity that price is wanting to grab. Now, we can see from this area here, all right, we do have a mitigation, this region. Then we move, and then we had a move to the downside, where we didn't necessarily see a candlestick body break structure, all right, but we did see a wick. So we know on some type of time frame, we possibly had a break of structure to the downside here, all right, leaving a valid institutional point of interest here. Right? Price pushed to the upside, but we did not quite tap into that point of interest. Instead, price moved to the downside and gave us this break of structure here. Beautiful. All right. After that, all right, then we see that price started to move back to the upside. Now, we were watching all of this take place. All right. We were watching all of this take place, but we did not actually start our day trading analysis until about 12 a.m. Eastern Standard Time in preparation for London session, right? Now, when price moved to the upside, let's go ahead and head down to the M15. Once price started to move to the upside, and let's take this off for the time being. So once price started moving to the upside, all right, you can go down to lower time frames and you can start to look for more information, right? More information including any transitions in price, any mitigations of supply and demand, any continuation patterns, any reversal patterns, any institutional supply being created, any institutional demand being created, you know, things like that, right? So we started our analysis here, all right? Now here, price had already tapped into this point of interest that we were watching the previous day, all right? Even though it was Memorial Day, we were still, you know, watching the markets, had our alerts set, things like that. You guys know how it is. So once price tapped into this region here, all right, at about 12:15 Eastern Standard Time, AM, right, we can see that this is when we started our analysis. By our, I mean myself and my team, right? Now, price had tapped into this area at about 11:30, all right? Our alerts went off. It was 11:30, our alerts went off, but we don't start our London session analysis, especially after a holiday, until 12 a.m. Eastern Standard Time, all right? Point blank period, and we have rules for a reason, all right? Price started moving to the downside. Now, understanding that this is an H1 point of interest, all right, really, we were on the M15, but we were also on the M5, okay? The reason being is because we were now looking for our entry opportunity, all right? 12:15 was here, okay? And what I wanted to see happen, okay, I wanted to see some type of sweep of liquidity, okay? And then some type of change of character within the market to give us permission to take a possible entry. All right, we need to see lower time frame institutional supply come into the market in order for us to look for shorts. All right, that's why you guys see this arrow drawn out right here. Okay, Okay, now when we drew out this arrow, price was already heading to the downside. Okay, however, in order for us to look for a sell position, we needed to see a sweep of liquidity first above this region for certain reasons. All right, so we can see that price, continued to move to the downside. Okay, pushed back to the upside. London session started here, so we had a fake out when London opened. Okay, then we had the move to the upside to grab liquidity, and then we had that nice move to the downside. Very, very straightforward. Okay, it's just confluence after confluence. If price gives you A, then you do B. If price gives you C, then you do D, right? These are set in stone rules to follow and before you take a trade. All right, so within this region here, all right, we can see that this candle here sweeps liquidity. We had a nice move to the downside, a little bit of imbalance left within the market as well, right here, right? A little bit of imbalance, okay? And then price moved to the downside and we had this wick take out this area here. Very straightforward, all right? After that happened, okay, price traded back to the upside, gave us a mitigation. This is where we took our entry. We risked 3.5 pips. Right? And our target was just the H1 week low. Okay, now there was a comment on a recent YouTube video where someone said the terminology that I used was incorrect when I said that we target weak structure and we trade off of strong structure. I want you guys to understand something, okay? Whatever is weak within the market is going to be an easy target for the price delivery algorithm. If it's strong, if there's an area that's strong within the market, it's going to be a much harder target for the price delivery algorithm because the algorithm is going to be fighting against the majority of institutional traders, right? Institutions target areas of weak price. They target areas that aren't going to be much of a fight, okay? And that's what you have to do, okay? Retail traders, yes. Retail traders think we're going to target we're going to target an area that's strong because price is going to go towards it. But you have to flip the thinking if you want to be successful within these markets. Okay, you have to target what is weak and you have to trade off of what is strong. You have to do the same thing that nature does over and over. The weakest gazelle is going to get eaten by the lions. The lions don't go after the strong gazelle with, all the meat on it, with, the big horns and the big body weight. Gazelles don't do that, or lions don't do that, excuse me, right? They go after the weak members of the herd, and that's what you have to do within trading, because once you're targeting the weak members of the herd, right, you're going to be targeting the retail traders, all right? So with that being said, if you guys enjoyed this video, feel free to leave a like. I think it deserves a like. What do you guys think? Come on, 10.51% return, and I broke it down for you guys from top to bottom. So you guys really should go on your charts and try to recreate the same analysis and just study it over and over and over again, because this is a perfect example of how we trade here at Mac Trading Academy. All right. I love you guys. Peace out. Catch you in the next one.